Let's see, start screen. All right. Just as a reminder, this is our edition, August 14th edition, Market Structure Edge, our demo. My name is Brian Wilson. It's August 14th. I'm a market strategist here at Market Structure Edge. Tim is traveling. He's actually speaking at a conference today down in Dallas. So I don't know if I'm the B team or the C team. Not sure there, but we'll have some fun together today. Uh, the basic rules here are quite simple. Please ask questions. We're here to learn things together today. So if you have any questions, please feel free to ask them. You can either ask them in the chat room or raise your hand as we're going along. As we're kind of going through today's session, I'll probably stop every 3 or 4 minutes just to see if I'm missing any questions. I won't be able to see it as we're going, through the meeting itself. So with that being said, I'll go ahead and get started. I have 5 or 6 different topics today that we'll unpack. And just as a favor, if you can just make sure that you are muted unless you are, asking a question. So I think that's it. And go ahead and share my screen and we'll get this going. For those who are our regular pros, you're very familiar with this. I won't spend a lot of time with it, but especially for those who are new, I wanted to give you just a flavor for what we're talking about. You hear us talk about 4 different behaviors in the marketplace, and the story has changed dramatically from the time that I first started as a trader. I was a buy-side trader late 90s up until about 2008, 2009. This is the story that I was familiar with, where active investors dominated the landscape for a variety of reasons, and we won't go into those reasons today, but it's very different now. Active money, those that actually care about the stock story, they're generally about 10% of daily trading. Fast trading, think of this as high frequency trading strategies. This is 2024 data, 46%. Passive investment, 25%. It wasn't even a category back in 1995. And risk management, about 19%. That category just continues to grow over time. Now, the reason that it's important to understand the 4 behaviors is because they care about stocks for different reasons. Think of this as the CNBC of the world. You'll hear about the stock story endlessly. Certainly nothing wrong with that. But recognize that that's only about 10% of daily volume. It just doesn't move the needle as much as it once did. Passive money. Why does passive money own something? Well, because they possess characteristics that are similar to other stocks. Think about index funds, ETFs, quant funds. That's the type of behaviors we're talking about there. A lot of times they're owning things for market cap reasons. It might be sector. It might be low volatility. They're owning a particular stock because that stock possesses a certain characteristic. Fast traders, they know nothing about the story. They don't really care about the story. It's just a number on a screen. It's split-second trading. To some extent, this is the market making of the world, if we can use that term. It's not a great term for them, but they are making markets, and they're trying to profit on price differences in securities. And then lastly, that last element of it, risk management. What's happening in the market in terms of derivatives? This category just continues to grow. With that being said, I'll stop my sharing here for just 1 moment, see if we have any questions so far. Great question. So a question came in whether, and get to the question itself so I can see it better. It flashed in front of me. Are retail investors active or fast trading? It's a terrific question. They're actually going to be listed under fast trading. The reason for that is the fast trading firms will buy out all that retail order flow. So, for instance, I trade on Charles Schwab. And what that means is that Charles Schwab, if I have my limit orders out there, they're going to be aware of my limit order and all the other millions of limit orders that are out there. But retail investors, because that order flow has been bought out, is going to show up in the fast trading bucket itself. Hopefully that makes sense. And by the way, that's part of why you can get quote unquote free executions because they have that information. As you guys know, hardly anything is free in life. So it's just good to be aware of that. I thought for a few minutes, I'm not going to belabor this exercise, but I thought I would take you through what I track on a daily basis, not because my stuff is the latest or greatest. And in fact, I'll show you some of the things that I've dropped over time. But maybe it will trigger a few thoughts for some of you guys. You're like, oh, that's interesting, or I have no idea why Brian tracks that. This is my first spreadsheet, and the information I track every morning usually takes me about 15 or 20 minutes to kind of grab everything. On this particular spreadsheet for both momentum and low volatility, same exercise. I'm tracking the total number of names each day. I'm looking at what was the return in the S&P 500 the day before, and I'm looking at the current sentiment measure. And over time, it just gives me a real good feel for what's happening. I can grab an average, like, what's been our average recently? During the last month or so, it's been about 13 names in momentum. So it's just good to have some of that knowledge. You can see a bunch of other rows here at one point, or columns. At one point, I was actually tracking all the different names. So, there were 3 names today in communication services and 4 names in consumer discretionary. And I tracked it for a while and I saw it didn't really have any purpose, or it wasn't helping me. So I let it go. And sometimes that can be a helpful exercise. You track something for a while. It doesn't give you any big improvements in terms of your trading. So you're like, maybe I'm wasting my time. Another spreadsheet that I'll look at, I'll just drop the names for each given trading day. And if you're not familiar with this process, and you can do this for any portfolio that you want, just go to the actions and export to Excel, and then pull that up, enable it, and then do whatever you want with the data. But you can just copy and paste it right from here. Whenever I get larger numbers, I'll just do that copy and paste exercise. This one is actually another one that I was tracking a lot more information over time, and I whittled it down a little bit. What you'll see on this spreadsheet, you'll see sentiment information. That is daily information. That's the 5-day read that you'll see in the system. I track big tech, and some of these are pretty similar. I track big tech. I track the Magnificent Seven, the top 15, the triple Qs, and I track 2 short portfolios. I talked about this last week. I'm not necessarily looking for names to short per se, but I'm just looking at the general tendencies in the market. My Berry short portfolio tracks names at the top end of the spectrum where demand is starting to fall from 9, but short volume is increasing. This short portfolio tracks it at the bottom end of the spectrum where short volume is moving below 4. And you can see we're getting a few more names on that side of the spectrum. Down below is short volume. And I hid some rows here, but when I first started using this spreadsheet, I was actually tracking for each given sector, and it looks like I might have erased it. But for each given sector, I was actually tracking that sentiment data and short volume. And there was nothing wrong with tracking that, but over time I saw it wasn't giving me anything beneficial, so I dropped that info. One other item that I track, one other spreadsheet here, looking at daily returns for the SPY, looking at weekly returns for the S&P 500. And you've seen some of this before, but I'm also tracking what's happening from a volatility perspective in the market. In other words, this means that it's 40 basis points lighter than the 200-day average. That's the current 5-day average. There's your current 5-day average for underlying stocks. And just for those who are perhaps a little bit new to this exercise, let me show you one report on the investor relations side of the business. So we run two different businesses. One is for investor relations professionals, and one is Market Structure Edge, as you're familiar with. But this is an S&P 500 report. Take a look at this and think of this as the underlying stocks. So volatility on a 200-day basis. And what we mean by intraday volatility is movement from lows to highs during the course of a given trading day. So 2.5%, 2.4% on a 5-day basis. Look at the SPY over time. And this is where the inherent arbitrage in the market kicks in. 1.2% for the SPY 200-day basis, about 80 basis points here during the last 5 days. So you can see volatility has really been moving in here during the course of the last week. By the way, when I see this number get to 60 basis points, 70 basis points, it's usually a clue that we're going to have some type of volatility event. Everyone's getting on the same side of the boat, as it were, and you can only do that for so long before you have some bout of volatility. It might only be one day, or it might be longer, but that's one of the clues that I look for. And one last spreadsheet to show you. This is just the SPY, and I just capture the weightings on a daily basis. And you can see this is the top 15 names. And if you just do that exercise real quick, you can see that's 43% with those top 15 names. That's part of the reason that we track that so closely. I pulled out the Magnificent Seven this morning when I did the note, and that was about 35 or 36%. But once again, it's huge impact, on the market itself. I'll show you one other thing that I stopped tracking. There was nothing wrong with the data. I just couldn't figure out a good way to use it. So what this was looking at all the S&P 500, what percentage of names bottomed on a given day, what were moving down, this is sentiment, what topped, and what were moving up. It was great information, but over time I couldn't tell rhyme or reason for why I was tracking it. You can see I stopped tracking it in December. So the takeaway is there's lots of good information out there, right? And sometimes you can capture some of that information and you're like, okay, that's well and good, but it's not helping me as a trader. Well, maybe it's time to stop tracking it. So just a couple things there. Candace, I've never used IB, so I can't really say per se. I know there's a lot of IB users. I know Tim is one. So I've heard good things about Interactive Brokers. Oh, and that was a question from Candace. Do you like Schwab better than Interactive Brokers? So I don't have a personal preference, but I know a lot of Interactive Brokers are out there. Are investor types declared by the regulator or does Market Edge decide? Terrific question. That was actually part of the reason that our president, Tim Quast, actually started the other firm. He used to be an IRO for a telecommunications firm. And back in the day, this goes back over 20 years ago, he discovered over time that he would look at his execution data, and on the investor relations side, you get quarterly data back in terms of who bought what during the last quarter, who sold what. And he would get information like, somebody bought 250,000 shares, somebody sold 250,000 shares. Well, keep in mind, this company was trading millions of shares a day. So he was like, something doesn't jive here. I'm not getting all this information. So what ended up happening then is he started taking trade execution data, making it into these models then that you see with active investment, fast trading, passive investment, and risk management. So we decide that, and we don't decide it arbitrarily. It's going back over looking at data for the last 20 years, and we're looking at how the brokers are routing order flow in the market. That inherently gives us a clue what type of order flow it is. If you're routing flow for an active investor, it's going to be very different than if you're routing flow for a fast trader, as an example. Sean, can we export the daily trading list? Yes, you can. Let me share my screen. We'll just go through that here for a second. Oh, the daily trading list itself. I'm not sure in terms of that. I was looking at the momentum. Let's take a peek. It doesn't look like we can export that. So unless I'm missing something, no, that is not exportable. But you can export the whole list from either here on momentum or on low volatility. And you could do this exercise, of course, for anything you wanted. You could grab all the large cap stocks out there, export them, sort them any way that you wanted to. That's part of what I do actually for a few of my sector portfolios. I will sort them by the largest ones in the market, and sometimes that gives me a clue if the whole sector is about to move. Let me give you an example. So communication services, not a great example right now, but I've grabbed the top 9. And if there's early movement from any of those top 9, a lot of times it'll show up here before it shows up there, if that makes sense. Daily trading lists. Okay, Brad's responding to Candace. In terms of his trading platform, his favorite is Schwab's Thinkorswim, but he does a lot of options trading, and Thinkorswim is built for options. I'm just going through some of the questions right now, and I wanted to make sure that I'm stating what the questions are for purpose of the recording. Excuse me, is it possible for us to go back and get some of the historical information for some of the data you collect? Any of the spreadsheets that I showed you today, if they're helpful for you, I'm happy to pass that along. And some of the other information, depending on what it is, sentiment, demand, we can certainly request with our engineers and, go back further in time. Comment from Brad, both Schwab and IBKR allow you to open a paper trading account so you can try out their platforms. Question from Sean. Thanks for all the questions, guys. This is fantastic. Can you briefly explain the difference between the daily trading ideas and the momentum portfolio, etc.? Happy to do that. Essentially, the difference between them, the daily trading ideas are going to capture the best of that lot during the last 90 trading days. So if you look at the momentum portfolio right now, in total, it has 16 names. And if you look at our daily trading ideas right now, it has 13 names. So it's capturing the ones that have a 50% chance or better during the last 90 days of making that for the momentum portfolio, of making that 2% profit. For low volatility, that would be the 1%. But the way that you can think about it is it's excluding the ones that have been below 50% for the last 90 trading days. Go back to the questions here for a moment. Can you explain the focus moment? Let's see if I missed any. Sorry. Okay, Thinkorswim, questions about options. I like Thinkorswim better to trade, but I like IB better for analyzing? Probably a question of habit, but both are very good. Question from Candace, can you explain the focus momentum portfolio and how the names are picked? Today, 2 of the 5 are in the daily trading ideas, but the other 3 have divergence, but are not in the daily picks. Good question, Candace. I was going to go to Edge Focus a little bit later in this discussion, so let's go ahead and go there now. So the Edge Focus itself, minimize a couple of these screens for you. Looks like me during my normal day. Okay, so this is the criteria right now for the Edge Focus portfolio. Criteria is sentiment or demand is greater than or equal to 8. The trend is up. Dollars per day of at least 100 million. Short volume is less than 50%. The 5-day trend for short volume is down. Price of at least $20. The exit criteria is going to focus on either falling demand or rising supply in the 5-day trend itself. Easiest way to understand this, Candace, is the criteria is just a little bit different. It's capturing the same basic emphasis in the momentum portfolio, but the momentum portfolio has a few other characteristics. And let me grab that for you just so you'll know what I'm talking about. I might have to go. And I'm not remembering right off of memory, probably because I'm doing this live. But Candace, what I'll do is I'll pass along those characteristics to you later. It's in my user segment, but I forget. Oh, here we go. I can do it. Okay, so momentum. And this is what the momentum portfolio, the characteristics look like. So as you can see, there's a few greater criteria here. You know, one of them, a volatility component being one of it. Market cap might play into it a little bit as well. That divergence factor might also play into it. But you can see different criteria for each one of those. Are we tracking data for crypto like Bitcoin or Ethereum? Not necessarily for those specifically. You can capture that in any portfolios that you would like to. I'll share with you here my Bitcoin portfolio as an example. Is it perfect? Probably not. There's probably names I could add or subtract from it. But this is what my Bitcoin portfolio looks like right now. These are the names that I'm capturing in it. Are we specifically capturing Bitcoin and Ethereum? You know, no, we're not. Let's see. Dollars per day or what filter that is. So question from Greg, can you explain the dollars per day or what filter that is using? That's looking at dollars per trade. It's basically doing the math. It's in the background right now, Greg. You don't necessarily see it in the data itself, but it's looking at this is how much dollars is going to be trading every time in DOCU at a clip. And then it would look at the number of times that it trades during the day, and then you would get that dollar per trade figure. Right now, that's not something that's sortable on the dashboard, but just know it's in the background.
I guess my question on that, Brian, is like, is that volume though, or something? I mean, that's one of the criteria on the focus equation. But
let me
I'm not
see if
seeing that as a pull down anywhere. I mean,
it's
there's,
not a pull down right now. Let me show you what it looks like with one of our investor relations reports, and maybe it'll give you an idea of
okay, thank you.
what it's capturing. No, thank you. Um, okay, so sorry, this will take me just a moment. Okay, so an example for Ameriprise, and this is on the investor relations side of our business. So as I was explaining before, you have the average price for Ameriprise, how many shares on average it trades at a time, number of trades per day, dollars per trade. And if Ameriprise was uh, on a store shelf and someone wanted to buy a 50 basis point position in Ameriprise, this is how easy or hard it would be to do so. So this is the dollars per day figure, and it's just taking the math. It's looking at the average price during the day, the trades per day, and just running down through the math. Obviously, the greater the dollars per day, the more liquid, the easier it is to get in and out of. If you have a company that's trading $20 million per day, that's extremely difficult to get out of. I had a company recently that came under a lot of pressure. It was a larger company, but look at the difficulty that active investors have in the marketplace. You're trading 25 to 30 shares at a clip. So what's going to happen? Well, fast traders or the machines are going to pick up on that, and they're going to make it very, very difficult for active investors. It's almost like paying a tax on the way in, paying a tax on the way out. It just becomes very, very challenging. But dollars per day, Greg, big picture, it's how much is actually trading each given trading day. Where do we find the focus momentum portfolio? Sean, that is for users, so subscribed users. And let me whet your appetite a little bit, perhaps, in terms of what we're talking about there. It's been an extremely good portfolio year to date. So once again, this is the criteria. What you receive for that on a daily basis. This is what it looked like today. So each day you would get an email telling you what to exit or what to add. Today we were pulling out of ABBV, adding into Costco. These would be the 5 current holdings. If we look at performance numbers year to date, and it's running through the exercise from the beginning of the year, but it takes you, that's part of it, sorry. This gives you the full flavor. So this is performance year to date versus the S&P 500. So 35% relative to returns of about 10%. Could we stay in this portfolio all the way through the year? Don't know. It's probably one of those things where we would be in this one for a while, and then we would switch to another one. Tim has been doing a really good job behind the scenes of tracking 4 or 5 of these portfolios and trying to figure out the best time frame to shift from one to another. But so far this year, this has been an excellent portfolio. Once again, it is for subscribers. Question about APP stock in terms of, can we discuss that? And Cindy, I'm guessing in terms of what has been happening in the name recently, but it's a good discussion point on a couple of different lines. And Cindy responded, yes, what's been happening recently. So if we look at APP, I could get to another way. So we look at app loving. It's had a tremendous run, right? Over the last couple of weeks, if we look back at the end of July, it's moved from 363, all the way up to 467. I think that was about a 25% run. Coming under pressure now, you know, data looks good, right? It's a 10 and short volume is low. Why would it be coming under pressure now? Well, recognize where we are in terms of context, and that's something to always remember. Tim and I try to write about it in the daily notes. We're at options expirations, and market participants will be making decisions regarding their leverage and hedges. So if they owned call contracts on app loving and they want to roll those call contracts, do they want to roll them looking out to September? That's part of the question right now. Or do they want to drop them and just take profits? I think we saw some profit taking yesterday. I think we're seeing a continuation of that profit taking today. It's part of the reason, and I mentioned it in today's note, when you're trading in the middle of a contextual event, if that makes sense, and options expirations is one of those periods. One thing that I want to look for is I want to look for volatility right now. If I was going to pick up a bull, recognize its normal intraday volatility, movement from lows to highs. Take a look at what bull has done during the last few weeks. Has it been on an incredible run? At expirations, could there be risk of a pullback? So those are always questions that I'm thinking about, when I'm, especially during expirations, when I'm looking at entering into positions. On the Edge platform are the charts that we use configurable color or line style versus waterfall. Brad, not right now. That might be something for the future. On the focus momentum portfolio, should we buy the stock at the entry price or as close to the entry price as possible? And Cindy, yes. I will trade those names to a certain extent because I like to trade. But if you don't like watching some of those names, yes, just trade it as close as you can to those prices. What I will do is I'll just drop it into a watch list, and I'm doing other work during the course of the day, and this is my long-term portfolio. And what I did earlier in the day on that one, I just slowly got out of ABBV. I think I made 4 different trades, and it was doing better, so I just slowly moved out of that position. I've been slowly getting into Costco today to the extent that you can slowly get into a stock that's $980. But I will trade it to a certain extent. If you don't have time to do that, yes, feel free to just grab it as close to that price that you see in the email. Sean, thank you for the question. Just send us an email if you would, in regards to that, if you would like to get subscribed to that. And Martin, yes, as well. If you do want to get subscribed to the Focus portfolio, just send either myself or Tim a note. Just once again, it is for those who are subscribed. It's not for trial subscriptions, just as a FYI. And Joe verified that. You'll get it via email every morning. For me, Mountain Time usually comes a little bit after 6 a.m. Every day. Guys, I really appreciate the questions. These are fantastic. Wanted to take a couple of minutes, and we've gone through a lot of the different trading ideas already. Directional trading, wanted to talk for just a moment in regards to that. You've seen some of the discussion points as it relates to the momentum portfolio, the low volatility portfolio. As a reminder, you're just looking to get in between the entry low and entry high there. Momentum trying to make 2% or more, low volatility trying to make 1% or more. What if you like to directionally trade in the market? What does that potentially look like? I'll give you a clue. Recently, I have not been making any directional trades. Why is that? I've had a difficult time, getting a clear signal in terms of where the market is going. What am I looking for when I'm looking for a clear signal? So if I'm looking to, and I usually go SPXL if I'm a buyer, SPXU if I'm betting on downside. Those are leveraged upside or leveraged downside. Let's say I was looking to buy SPXL. I would want demand moving higher. I would want supply moving lower in the broad market. I would want, and I won't pull it up, but I would want a similar signal in big tech. In other words, both of those being aligned. And I would want to be as clear as possible from any contextual events. So we're in the middle of expirations right now. I don't know if strategies are going to change during the next few days. I can see the setup right now. This is a positive setup. Demand is peaking higher. Sentiment, short volume is moving lower. And I said I wasn't going to go to big tech, but I will. And I stopped sharing. Sorry about that. So that was broad market. And if we look at big tech that I had on the note this morning, you can see very similar signals. Demand up, short volume lower. So those would be in alignment. If we were not in the middle of expirations, I would probably trade SPXL. Since we are in the middle of expirations, I'm going to trade from the daily trading ideas. It's just the way that I approach it. I want things to be clear from a context event. I want to have clear signals. I want alignment with big tech. And then, when you have those different signals going with you, I'm comfortable going one way or the other there. Question from Martin, is stock float a factor in the algo? How does float itself affect the data? Part of the float, Martin, is going to affect like just how much actually trades on a given day. So the float is inherent in terms of that trading volume and dollars per trade. It's kind of behind the scenes. But if you have major stockholders within the company that own portions of that company, the float's going to be very different, and it won't be as liquid as other companies. But that's going to be kind of in the background. I think I've covered most everything I wanted to cover. Did want to talk you through, kind of running close to being out of time here. Wanted to walk through, what do I see ahead? And I already hinted at part of it. I'm looking for alignment. I'm looking for alignment between what's happening in the broad market and big tech. Big tech, once again, about 35% of the S&P 500. Right now, this is a great setup, and I mentioned it was a bullish setup this morning. But once again, we're in the middle of expirations. We had PPI data this morning. That PPI data came in hot, obviously had an impact on the market. One other factor to consider today, and Tim and I will kind of mention this once in a while if we see it in the data itself. Let me show you a recent trend that I've been watching for SPY. What you're looking at here, this is data that we capture on the Modern IR side. And what you're looking at is if it's above the zero axis, that reflects greater influence from a given behavior. So all the green represents passive money that in July was flooding into the SPY. What do you notice in general? Well, the more green that you have, the better, right? Passive money, buyers in the marketplace. You can see the same trend playing out a couple of other times during the year. When passive money comes in as buyers, well, security prices go up. look at what's been happening recently for the SPY. Similar development. Here's the pattern right now. It's moving, sorry, I got the wrong one there. It's moving higher. This is the current pattern. So moving higher over time might be running out of energy a little bit. Don't know for sure. We'll be watching that to see how it plays out. But if you look at the energy behind some of the market moves that we've had recently, look at the 200-day average on passive money. Look at where it is now. That's the type of movement that's going to drive the type of appreciation that we've had here over the last few months. So just a tremendous surge from ETFs primarily that's been driving these advances. Is it running out of gas? I don't know. It's a normal cycle. It'll be in play for a little while. It'll run out of gas. Another behavior will take over. Passive money will come back, and obviously recognize passive money can be buyers or sellers. But recently we've been tracking a lot of buy interest. Big picture in terms of our look ahead, watching for alignment. Do we continue to get sentiment moving higher coming out of expirations? Do we continue to get short volume moving lower, both for the broad market and for big tech? And I mentioned expirations itself, because as we turn to next week, next Monday, the focus will shift to the September series, and the strategies that have been in play for the August series, will they continue to be in play for September? We don't know right now. We know what the data is right now on Thursday, the 14th, but we'll have to wait till next week to see what that data looks like. I think that was everything for me today. Any final questions from anyone? You guys have had a tremendous, fantastic questions today. I really appreciate it. Once again, if you are a subscriber and you want to join the Edge Focus Momentum portfolio, just send an email to myself or Tim, and we'll make sure that you get on that list. With that, I think we're done for today. Thanks for joining. Greatly appreciated. Hope you have just a wonderful rest of the day.